consumption and animal-related consumption is going up, the Godrej Agrovet will continue to gain more and more market share. Though this has really not given very good returns in last couple of years, but I think now time has come that this will also start performing. So remain invested.
All right. So we've just managed to go live. I think there was a bit of a technical snag, and I do want to repeat for those of you who missed. So Santi, I think you probably missed the answer to your question, and the advice that was given by Ashish was to hold on to your investment in NMDC, because he believes that if steel companies are doing well, then NMDC will also do well. We've got Pavan Kumar, who's asking about Sun TV. He's got a 550 call a few minutes back. I'm guessing this is the current series itself, Kunal. He says that he's afraid because it's a low beta counter. Should he hold or exit?
So yeah, it's a low beta counter, and frankly, I think if I'm not wrong, for the last 2 or 3 weeks, the stock was into the F&O ban list. I think it's just today that the stock has come out of the F&O ban, so which is why you're seeing some slight pickup in price action. But these are the kind of stocks which typically, because of the low beta nature, typically you should trade post the breakout once that happens. Because of the low beta nature, the stocks may take a lot of time to consolidate. So look at Sunday, for example. I think from the end of May levels of 550, the stock has gone to a 20-30 point range from 550 to 520 on the low side, and it's taken almost 3 or 4 weeks for the stock to consolidate yet in this band, and still not very close towards that breakout point. So this time factor could be a very critical factor, and which is why from an options perspective, it will not be a prudent strategy to buy the stock in the anticipation of a breakout. Typically, you should buy these stocks when they are very close or have confirmed a breakout pattern.
The next query that we have is from Manas, and he is saying that can I enter either Praj Industries or India Glycols, because he wants to play the ethanol story. So he's asking if there's any other stock that he should look at investing in. Also, he wants to know what's the medium to long-term outlook of the particular stock that you would be suggesting. Ashish, which stock looks good if Manas actually wants to play the ethanol story? Praj Industries, India Glycol, or any other story or any other counter that you can think of?
Yes, I think Praj is one of the best pick here. No second thought on this. And again, reason is the kind of growth that we are seeing in ethanol demand across the board. Now there's a waiting for at least 9 months to 12 months if somebody want to put up an ethanol plant. So Praj is in fact going to be the best bet. And another bet which I like here is Sri Renuka Sugar, because they are the ones like who are having largest capacity for ethanol, and this is a big turnaround story. And they are going to have almost 7,500 kiloliters per day kind of ethanol capacity. So this is a dual play of sugar as well as ethanol at the same time, turnaround case. So Renuka Sugar can be bought, and as far as manufacturers are concerned, I think you can remain with Praj.
Okay, it's a very interesting story, in fact, the ethanol story, and Praj has the largest market share in the capacity for, or rather the plants that are used to distill ethanol, and that's working in their favor right now. Let's go to the next question there before I get sidetracked. Spotlight episode was on sugar, so I'm quite passionate about it now. Shivakumar has got a question on Equitas Small Finance Bank, bought at levels of 34. He's asking if we should book profits at this juncture or invest it elsewhere, Kunal, coming to you on this one.
You can look to book profits over here. The stock has done pretty well for itself from being a level of 34, 35 approximately. It's now at 60 odd rupees. So short term wise, maybe the stock could go into a consolidation. And if you're looking to probably shift from this stock to say some other banking names, then you can look at SBI. I think at current levels as well, it looks fairly attractive over the long term charts, given a 10-year breakout, and this could be a big breakout for SBI. And we've seen what 10-year breakouts tend to do for many of these large cap names, over the last 4 5 years, we've seen many examples of large cap names doing phenomenally well. So if you want to shift from a trading position to now more of zooming on the investment side, then I would suggest booking out profits over here and shifting to SB. I think that's a much better prospect from a longer term view.
Query is coming in from Satish. He's saying he has 700. He has some Coromandel shares that he's purchased at 770 rupees per share. He wants to know what should he do with them. Should he hold or look to sell over the shorter term? Kunal, what's your take coming in on Coromandel International?
I think it looks attractive. In fact, this stock has been one of the few stocks which has, over the last 7 8 years, specifically, I think from 2015, prior to that, I think had started a very strong uptrend for itself. Now, the first leg of uptrend lasted for 2.5 years, from 2015 onwards to 2017 and or 18 start. Then the stock went into a two years of correction, and then restarting an uptrend for itself. So again, I think an uptrend which started for Coromandel somewhere in 2020, I would sense could probably last for at least another year or from the time factor analysis for the stock, which means that there could be a potential upside of another 20 to 25% further from current levels. So purely on that time prospect, I would suggest a hold on Coromandels and would look out for targets an upside of almost 20-25% from current levels, at least in the next 9 months to 12 months. And then post that breakout, assuming if it happens at 1,000 plus levels, you can probably have a trailing stop loss and keep on riding up for higher targets.
Okay, we've got a question coming in from Vidya Shetty on a stock that has been under the hammer, so to speak, over the last few days. This is Adani Power, which was bought by Vidya at a price of 145. From what I can see, it's at lower circuit today as well. What would you say should be done on this, Ashish? Should you hold on to this? Because you had the management come in and talk about the various businesses of the Adani Group, and they say that the secular uptrend in terms of earnings is intact. But you can't deny that some of these stocks have seen a tremendous rally. So perhaps to a certain extent, you can argue that they are a little overvalued at this point. Ashish, we're talking about Adani Power, and we've got Vidya who bought at levels of 145. The stock is under pressure and has been over the past few days. She's asking if she should book losses. Seeing losses on in the last few days in terms of not just Adani Power but the entire quite a few of those stocks in fact. But what would you recommend in this case? 145 is the buy price.
See, Alex, what I would probably recommend for the view over here is that shift to better quality stocks. So Adani group of stocks, of course, have been in the thick of news flow. In the last 12-13 months, some of these stocks have given absolutely crazy kind of returns over the last 12-13 months. Some of them over the last couple of years as well. Adani Power, now trying to compare many of these stocks, when you try and look at stocks, there are two prospects which you have to look at. One of them is that whether the stock is marred with a lot of news flow. And the second point which you look at is how is the long-term structure placed by as compared to rest of its other peers. When you look at the power stocks, frankly, I believe there are much better quality names on the power sector side. So I would suggest a switch from Adani Power to something like Tata Power. I think that stock, which is just in the last 6-7 months back, given a big break out, I think looks fairly attractive. It's not even reversed back the entire cycle for Tata Power over the last 7-8 years. So the stock is still way below its all-time high levels, and which is why there is a strong possibility that over the medium to long term, this stock can perform really well. So why invest in a stock which is marred with a lot of news flow and excessive amount of volatility, and probably look at Tata Power is what I would recommend for the viewer.
All right. Next viewer query is coming in from Padma, and she's saying she has 100 shares of Tata Steel as well as JSW Steel, and she's actually seeing a profit about 20% on her investments. She wants to know, should she go ahead and sell and buy at lower levels given the volatility that we're seeing currently in the metal prices? Kunal, what's your take on this? Definitely sort of thought coming in most of the investors' minds that given that what the metal sector is seeing off late, does it make sense to go ahead and sell your holdings and then buy at lower levels, because most of them have definitely made profits on metal stocks?
See, it's a good prospect to trade these stocks. When you look at, so assuming if the viewer already has more than 20 to 25% return, so it makes sense to probably try and do some sort of a short-term trading. But what happens most of the time is that when you're looking at quality stocks, and we are talking of quality stocks on the middle pack like Tata Steel and JSW Steel, too much of or rather excessive trading where you try to time the top and then the bottoms as well at times. At times when the cycles are so fierce, you tend to miss out, and then probably playing that catch-up game becomes a bit more riskier. So I think it all depends on the kind of time horizon. So if you're in from the next 2 years or 3 years perspective, then I would definitely advise to stay invested on the large cap metal names. I believe that the prospects for these stocks looks to be extremely encouraging over the longer term. We've seen very strong breakouts coming out for names like Tata Steel over the last 10-12 years. Is the kind of breakout the stock has already shown. So, which is why I believe that the prospects over the next couple of years at least could be significantly higher for these names. So, if your time horizon and if you have that risk appetite to hold on to your investments, I would suggest to hold on to long term. But if there is any kind of a hiccup which you have, then I would advise maybe a partial profit booking. Say 20-25% of your holdings is what you can book out at current levels. But I would advise majority of your holdings is what you should carry on from a longer term view.
I think that answers Sumol's question as well. Sumol has a Jindal Steel that was bought at levels of 396. I'm going to take Sneha's question, and I'm coming to you on this one, Ashish. Hopefully, we've got your feed in order. She's got 500 shares of Majesco at an average price of 100, and asking about the outlook. Should they hold on is the question. Do you have a view?
Shall I give my view on Adani Group, like, if you want, because there was some sound noise in between, so I couldn't reply at that time.
In fact, you can tell us about Adani Power, and then you can tell us about Majesco.
Yeah. So what has happened actually in Adani Group? There are 3-4 things happened by this fiasco. What we are, first of all, the valuations of all these stocks are quite rich. Second, what has happened that everyday traders were making a lot of money by doing intraday trading or BPST kind of trade in these group of stocks. So when stocks came down, now there is a stampede to come out from this side. Third thing, what has happened is from few stronger heads now stock has gone to almost all into retail hand. So this is the problem that now stock will take plenty of time to recover, and now the kind of short positions are built in Adani Port, etc. I think there's more downside left in all these stocks. So my suggestion will be to stay away from all these group stocks for some time. Now, as far as Majesco is concerned, again, there's now nothing left in company as such, and in my view, you can exit from Majesco at this price because it's just trading which is happening in this stock, and the real business is not there. So instead of this, look at more 5G related stories where you can better returns. I'll recommend DEN Network. You can look at even Hathway Cable can be looked at, or HFCL can be looked at, which are going to be major beneficiaries of 5G launch and for domestic procurement of their hardware.
Alright, the next viewer query is from Rajan Vittal, and this one is for you, Kunal. He's saying that he has 100 shares of Lupin, which he's purchased at 1,185 rupees per share. He wants to know, was the 3 to 6 month target, or should he actually look to exit Lupin? So what's the suggestion coming in for Rajan?
So I think if I'm not wrong, Lupin was one of the few stocks from the pharma side which was in the back of some negative news flows a couple of days back. But the stock is trying to absorb all this negativity. So remember that the stock was one of the late movers. It took frankly on charts to give a breakout above that 1100 mark. But the time I think this happened approximately a month and a half out back. For Lupin, the stock went into a very strong uptake. You saw volumes participation increasing rapidly for the stock, and now it's gone to some sort of a consolidation. So this generally happens for stocks which are marred with a lot of negative news flows. That they tend to give you a breakout, but then consolidate for a prolonged period of time. Lupin is the stock in that category. If you have a time horizon of at least another 6 months to 9 months, then I would suggest to hold on Lupin and keep that 1100 approximately as a stop loss range, which was the previous breakout point. Because if that stop loss is not reached, there is a strong possibility that Lupin can scale back towards 1300, 1350 mark.
All right. We've got a question coming in on Deepak Fertilizer from Senthil. Bought 30 shares of Deepak Fertilizer at an average price of 451. Should they average on dips and continue to hold for the long term is a question. Ashish, coming to you on this one.
Yes, my suggestion will be to remain invested in all fertilizer stocks. Deepak is again a good stock to hold, and this is just 5% away from 52-week high. Again, we need to understand why fertilizer stocks are going up. So the three major reasons. First of all, whatever the long pending subsidies were there, which was unpaid by government, they have released recently. Second, whatever the prices of urea were there, they're slightly decontrolled, so they are going to get advantage. Third, as monsoon is good this time, so there's plenty of again demand for NPK and urea both this time. So fertilizer stocks are going to have a lot of cash now, and whatever the cash related stress were there, which is not there in the sector. So this is a sector which can give very good returns in this year also. So my suggestion will be to remain invested in Deepak Fertilizer. You may see 500 by the next quarter result.
So that's on Deepak Fertilizers. I have a next question for you, Ashish, which is particularly on the agri themes. But before that, let's take a look. If you could actually rather recap for our viewers your 12 multi-bagger ideas that you've actually given earlier on the show. And the query that I was going to ask you was on UPL. Does it make sense for the next 5 years? But you can actually talk about the other stocks as well.
Yes. So in fact, UPL is a market leader in agri-chemical space, and in my view, this is going to be multi-bagger, and this is not an Indian company now. UPL is a MNC company with global presence and with very good presence even in South American market and European markets, etc. So UPL you can buy. Along with this, I like again PI Industries, which is again one of the market leader in agri-chemical space. And there's one IPO is coming is Indian Pesticide Limited soon. So the valuation of PI industry will I see the further rise in coming days once this IPO comes in within a month time.
All right, let's keep this for a bit so that people know what the stocks are. In fact, if they're taking them down, I'd request you to take them down, or maybe you can scroll back later and do that. We've got a question coming in on another stock. In fact, this is from Abu Dhabi. Dhananjay is asking, holding 1,540 shares of Deepak Nitrite, what is the long-term target? Coming back to you on this one, Ashish, and surprisingly, we've got a lot of long-term queries today. What would you say about Deepak Nitrite?
Wealth is only made when you hold a stock for the longer term. So it's good that people have understood, and particularly investors have understood that philosophy. So again, Deepak Nitrite is again a blue chip company and the market leader in the nitrite chemical segment. And the kind of growth we have seen in last 1 year, they will continue to do well at least for next 3 years. And the kind of returns Deepak Nitrite has given to shareholders in last 1 year is phenomenal. So if you are having a long-term horizon, continue to remain invested in this stock because there's no nearby even competitor to Deepak Knight, right? And whatever the capex, major capex was done, like in next 2 to 3 years, you are going to get good returns. And at the same time, their finished product prices are also almost at all-time high. So remain invested in Deepak Knight.
All right, that's the take coming in on Deepak Nitrite. Lastly, Kunal, I wanted to ask you, how does actually United Spirits look on the chart? Because a lot of our viewers also have asked questions on United Spirits. So how does this particular counter actually look over the shorter term or the medium term?
So it looks attractive, Cheryl. I think United Spirits has done phenomenally well. In fact, when you look at the last 1.5 or 2 months of performance, every United Breweries, United Spirits, etc. I think have done this is or the charts for United Spirits is very interesting. Is because that it's an underperformer over the more long-term scale as compared to many of its other peers. You look at the charts; it's forming a classical triangular pattern on the monthly time frame, and the stock has confirmed a breakout of this classical triangular pattern. So this makes the prospect for United Spirits as well very, very attractive. So the sector overall is doing extremely well. I think United Spirits being one of the top movers from the candidate from the looks also very attractive from a short term as well as from a medium term view. And the stock to gradually move towards a range of 750 approximately over the next in a couple of months.
All right, then on that note, thank you Kunal as well as Ashish for joining us on Buy Now Sell Now on this special day on our 12th anniversary, giving us your portfolio pick, your top portfolio picks, as well as actually resolving our viewer queries. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. But stay tuned, a lot lined up after this break, so don't go anywhere.
Is not just a number. 12 comes a full circle. 12 is for education. 12